Hey guys, it's CMAC here. Thanks for joining today. I have a very exciting news for you, and you might be thinking that I'm a software developer. What's my business with telling you about finance and giving you some tips about how to deal with money and things like that. But let me tell you something. When you're a programmer, you have a very good understanding about engineering stuff, right? You're building apps, you're doing things that it's purely technical. But you get to a point in your life that you want to build businesses. You want to, promote your product. You want to get acquired. You want to get investor. Things like that. So you need to have a good understanding about financial and how to negotiate your price, how to negotiate your evaluation, and very interesting things about money. Because at the end of the day, it's about having a good business, having a useful product. So I actually myself started, I'm self-learner. I started reading about, business and money management skills, basically learning about financial. And it's actually very simple, and you can do the same thing. I'm going to give you a few tips, and I'm going to show you one book that will basically help you to learn a lot, and get going with this concept. So the book that I'm about to show you, it's called actually. It does have a nice white cover, but I took it off. But here's the book. It's called, all right, this way. It's called Financial Intelligence, right? It's probably the best book in learning financial concepts. This will help you in your personal life, in your business, and in order, even if you want to evaluate a business, or let's say tomorrow you want to see if your employer is doing good or not, so you can actually take a look at financial and learn if the company is public. Or if you want to buy a stock, let's say, I don't know, whatever company tech you're considering, you can go and take a look at their numbers, take a look at their financials, and come up with the best decision, so that way you can make good investments. So let me show you this book here. You see it? Financial Intelligence. Karen Berman and Joe Knight. So this book basically talks about three things, guys. Right? These three things that I'm about to tell you are the most important part of any business. So the first one is called cash flow. The second one called balance sheet, and the last one called income statement. And I'll walk you through all these three short, very short, so you get an idea. But I definitely recommend you go get the book or get the audible version and listen to the book. So the first one is cash flow. When you start a business, right, money in, money out, it's important, right? Let's say you have $1,000 in your pocket, and what you want to do, you want to start a business with it. You build a website, and now you want money for advertisement. You want money for your web hosting. If you're using cloud services, you have to pay those, for the services. If you have a domain, you pay for that, web hosting, a lot of things, right? So if you keep spending money, money's going out, right? Let's say you just spend $900 on web hosting, cloud, infrastructure, buying some equipment, a computer. All right, you're negative 900. So your money was 1,000, no money in yet, right? It's all money out. So you spend more money, $1,000, you're zero now. You spend more money, you are negative $200, right? Let's say you spent $1,200, you had initially $1,000. So now you are negative, right? Down negative 200. So then you get your first customer. The customer pays $20. You get the second one, and then let's say you're at the point that you get 50 customers. They each pay you $10, right? So 50 customers, each 10, that's $500. Let's say that's monthly charge for the membership. So you have $500, and on the other hand, you have to pay for your hosting services, whatever product you're offering. Let's say you have to pay $1,000 a month. So you're making $500 a month. You are spending $1,000 a month. You are $500 cash flow negative. Think about it. You're $500 down every month, right? So you're losing money. This is not a good business model. Something needs to change. You cannot proceed like that, right? So cash flow basically gives you a very nice, clear picture about any business, right? Let's say tomorrow you decide to go buy a website from flippa.com. By the way, I'm not sponsored by Flippa, but it's a great place to buy websites, right? People build websites, put it on flippa.com. You go and check if you like it, you can buy it if you have a little bit of knowledge of programming and database development or things like that, or WordPress. You can just go ahead and acquire the website and start maintaining it, right? So simple. So if your cost is $5,000 a month and you're making only 500, you are cash flow negative. If you go to an investor and tell them the story, they're gonna hate you. They're gonna laugh to you and they're gonna buy, you know what, this is not a good model. Have a good day. So cash flow, it's always Lucky Camp will give you a good direction. Am I on the right direction? No, you're not. You're losing money. The second thing, it's a balance sheet. So I'm going to give you a nice, clear example about balance sheet. In balance sheet concept, let's say you want to buy a house, right? So you go to bank and you get a loan for $500,000, and the house worth $500,000, right? So you have a debt of $500,000, but your acquiring asset, which is a house, is $500,000. So debt and asset, the sum is always zero, right? If you're investing in your company, if you're buying 10 laptops, you're basically converting money, you're converting your asset from one form to another form, right? So from liquid, which is cash, it's converting to, equipment. So still in your asset. And then you have a balance sheet from your bank account, you took money out. So balance sheet, again, will give you a nice ratio between asset and debt. If this ratio is too off, that's not a good sign again for a business. If you have a lot of debt, you don't have much asset, that's not a good thing, right? So you want to see a lot of asset and then less debt on a company's balance sheet, right? If you're looking at stock, if you're looking at, if you want to buy a company, you want to make sure you have a look at what? Balance sheet. And the last one is income statement. And this one is so simple. It's like your, paycheck or whatever, source you have for making money. When you make money, you bring money, that's your income, right? But you have to pay taxes, you have to pay, a lot of, fees basically to earn money, right? Let's say I have a, website that I sell, camera equipment, right, online. So I make $50,000, for example, a month. But of course, those camera equipment, they cost something. Let's say they cost $40,000, right? So I sold $50,000 worth of camera, and I basically have to buy those cameras, and I paid 40 grand for it. So I'm left with $10,000, right, in my bank account after paying the cost of the camera equipment. So now on $10,000, I've spent money on, gas, on company car. I have to pay taxes now on it. So there are, again, fees that reduces my profit, right? So let's say from 10,000, I'm now down to $5,000, right? So $5,000 is my profit after, paying taxes and all the fees, all the operational fees that I need to pay, and I need to, continue paying if I want to continue doing business. So I'm left with $5,000 in my bank account. I sold $50,000, and now I'm looking at my bank account and I have $5,000. How much money I made? I made 10% net profit from operating this business. I made 10% operating profit. So you have revenue, you basically take out all the cost of sales and things like that, which was 40 grand in this case. Now you're left with 10 grand, which that was your gross profit, and now you have to take more, because you have other fees, and then at the end, you end up with your net profit. So again, some people, they look at the sales, it was like, wow, they have $1 million sales. But if you have $1.5 million cost of operating that business, you're basically losing 500 grand a month. So make sure when you're evaluating a business, you're looking at a startup, you're trying to get an investment, you understand how these numbers relate, right? So balance sheet, remember, positive, negative, asset column and what debt column. They're always balanced. In income, you want to see what the company makes. You want to see what the costs are, and then at the end, how much money you end up keeping in your pocket. And of course, cash flow meaning money in, money out. So of course, money in should be bigger than money out. You want to keep more money in the company. So that's why a lot of company, instead of increasing sales, they try to reduce the cost, right? So you have two strategies if you want to make the company or your website profitable. You can reduce your cost, either reduce your cost or increase the sales. How do you increase sales? Advertisement, putting a lot of things, getting, new partner, or, a lot of different strategies that you're not trying to, talk about those right now. So again, go back to the book, Financial Intelligence. This book basically will talk about concepts like EBITDA, operational profit, about revenue, balance sheet, cash flow. This will help you if you're in the tech industry, if you're a programmer, you come up with an awesome idea. Now you want to go get an investor. You can convince that investor, hey, this is actually making money. This is a good idea, right? That's how you prove it's a good idea. So I hope this was helpful for you and you learned something new today. It's about, 10, 11 minutes short video, and I try to give you a little bit of, each of those three topics: cash flow, balance sheet, and income statement, so you can start looking into different businesses. You never know. Tomorrow you might come up with an idea and get an investor and get rich. So I hope you liked it. Subscribe to my channel. Please like it down here. Hey, here. Like my video. And I'm going to share more and more about business and programming and finance, right? All right, so that's all for today. I think I've said everything that I had for today. I hope to see you soon, and bye.